Ever wondered how safe your cryptocurrency investments are? In the digital age, cryptocurrencies have risen to the forefront of the financial world, promising a future of decentralized and secure transactions. But where there's money, there's mischief. Today, we're venturing into the shadows of the crypto space, where danger lurks in the form of scams and frauds. Cryptocurrency scams are a dark reality of this revolutionary technology, and they've caught many unsuspecting investors off guard. But fear not, knowledge is power. By understanding the common traps and pitfalls, you can safeguard your digital assets and continue your crypto journey with confidence. In the coming minutes, we'll be revealing some real-life case studies that highlight how these scams operate, and most importantly, how they can be avoided. From Ponzi schemes to fake ICOs and phishing scams, we'll leave no stone unturned. Stay tuned as we delve into the dark world of crypto scams and how you can protect yourself. Have you heard of Ponzi schemes in the world of cryptocurrency? Let's delve into this murky territory. A Ponzi scheme is essentially a fraudulent investment operation where the person behind the scheme promises high returns with little risk. The catch? These returns are not generated by profit earned from the business, but are paid out from the investments of new participants. When there are no longer enough new recruits to sustain the scheme, it collapses, leaving the later investors with significant losses. Now you might wonder, how does this translate into the realm of cryptocurrency? Well, it's not all that different from traditional Ponzi schemes. Scammers often launch a new cryptocurrency, promising investors sky-high returns. They use the funds from new investors to pay off the old ones, creating an illusion of a profitable business. A notorious example is BitConnect, an infamous crypto Ponzi scheme. BitConnect promised a whopping 1% daily return on investments, and its value skyrocketed to a peak market capitalization of over $2.5 billion in late 2017. Investors were drawn in by the promise of high returns and the testimonials of early investors who seemed to be making a fortune. However, the high returns were not generated by any genius trading strategy or revolutionary technology. Instead, they were simply the result of new investors pouring money into the scheme. When the influx of new money slowed, BitConnect could no longer maintain the illusion of profitability, and the scheme collapsed. BitConnect made off with millions, leaving investors high and dry. The aftermath was disastrous, with many losing their life savings. This case serves as a stark reminder of the dangers lurking in the world of cryptocurrency investments. Remember, if it sounds too good to be true, it probably is. It's crucial to do your own research and understand what you're investing in. Stay safe, stay informed, and tread carefully in the volatile landscape of cryptocurrency. Initial coin offerings, or ICOs, can be a goldmine or a pitfall. Do you know how to tell the difference? An ICO is a form of fundraising in the cryptocurrency market. It's akin to an initial public offering, or IPO, in the traditional financial sector, but with one key difference. In an IPO, you purchase shares in a company. In an ICO, you're buying tokens of a new cryptocurrency that the company hopes will gain value. But where there's money to be made, there are scammers ready to pounce, and ICOs are no exception. They lure in investors with the promise of high returns and revolutionary technology. And because the crypto market is less regulated than traditional financial markets, these scammers often operate with impunity. Let's take a deep dive into one infamous example: Centra Tech. Centra Tech launched an ICO in 2017, promising to develop a crypto debit card endorsed by Visa and MasterCard. High-profile celebrities even jumped on the bandwagon, adding a veneer of legitimacy to the operation. But as it turned out, the whole thing was a sham. There were no partnerships with Visa or MasterCard, and the promised products never materialized. Investors were left high and dry, their money lost in the ether of the crypto world. The founders of Centra Tech had successfully pulled off a fraudulent ICO, scamming investors out of more than $25 million. The fallout was swift and severe. The U.S. Securities and Exchange Commission stepped in, and the founders of Centra Tech were indicted on charges of fraud. They're now facing jail time, and the investors, well, they're still trying to recoup their losses. So how can you avoid falling for a fake ICO? Look for red flags such as overpromising, lack of transparency, and celebrity endorsements. Always do your due diligence, and remember, if it sounds too good to be true, it probably is. Centra Tech's founders are now facing jail time, but not before they swindled investors out of more than $25 million. Remember, in the world of crypto, caution is key. Phishing isn't just for email anymore, it's crawling into the crypto space too. Phishing, in simple terms, is a form of cyber deception where fraudsters impersonate trusted entities to lure victims into revealing sensitive information. You might be wondering, how does this apply to cryptocurrencies? Well, let's dive in. In the realm of digital currencies, phishing scams are often executed via bogus websites or mobile apps that mimic the interface of reputable crypto exchanges. The scammer's goal? To trick you into entering your login credentials, which they'll then use to access your real account and whisk away your precious digital assets. Let's look at an example, shall we? Not too long ago, a crypto enthusiast named Alex was tricked by a phishing scam. Alex received an email from what seemed like his crypto exchange, asking him to update his account due to a security breach. The email contained a link that redirected him to a website identical to his exchange's platform. Without a second thought, Alex entered his login details, and before he knew it, his account was drained of its assets. Now, you might be thinking, that's terrifying. How do I prevent this? The answer is simple, yet crucial. Vigilance. Always double-check the URLs of the websites you visit, especially if you got there by clicking a link. Does the URL start with HTTPS? That X stands for secure, and it's a good sign. But don't stop there. Look for typos or odd characters in the web address. Scammers often use addresses that are almost, but not quite identical to the real thing to catch you off guard. And remember, your private keys are like the keys to your home. Would you give them to a stranger? Of course not. Crypto exchanges will never ask for your private keys, and you should never share them, no matter how convincing the request may seem. In the vast ocean of the internet, phishing scams are the hidden reefs that can shipwreck your crypto journey. But with a keen eye and a dose of caution, you can navigate these treacherous waters safely. Always double-check web addresses and never share your private keys. It's your first line of defense against phishing scams. So we've uncovered some of the dark secrets of the crypto world, but how do we stay safe? We've journeyed through the murky waters of Ponzi schemes, fake ICOs, and phishing scams in the cryptocurrency domain. These tactics are commonly used by fraudsters to lure unsuspecting investors into their traps, but armed with the right knowledge, you can navigate these threats. Ponzi schemes are the age-old pyramid structure that promise high returns based on the recruitment of new participants. In the crypto world, these schemes often masquerade as legitimate investment opportunities. Be wary of promises of unusually high returns and pressure to recruit others. Remember, if it sounds too good to be true, it probably is. Next, we explored fake ICOs, or initial coin offerings. This is where fraudsters create a bogus cryptocurrency and sell it to investors. The trick here is to do your own research. Look into the team behind the ICO, check their track record, and scrutinize their white paper. An ICO with a solid foundation will have a comprehensive and clear roadmap of their project. Phishing scams are another prevalent dark side of crypto. Here, fraudsters trick you into providing your private keys or login credentials. They may use email, social media, or fake websites to do this. To avoid falling victim to these scams, practice safe online behavior. Never share your private keys. Be cautious of unsolicited emails or messages that ask for your personal information. Now let's talk about some general tips. Always do thorough research before making any investment. Be skeptical of promises that seem too good to be true. Practice safe online behavior such as using secure networks, enabling two-factor authentication, and regularly updating your software. Remember, you are your own best line of defense. Being well informed about the risks and red flags can save you from falling into a scammer's trap. Remember, in the crypto world, knowledge is your best protection. Stay informed, stay skeptical, and most importantly, stay safe. Cryptocurrency offers a new frontier for investment, but with it comes new dangers. As we've explored today, the crypto world, while brimming with potential, is also riddled with pitfalls. Ponzi schemes, fake ICOs, phishing scams, they're all too real and too common. But remember, knowledge is power. By understanding these scams, you're already one step ahead in the game. Awareness and education are your best defenses against these dark forces in the crypto world. And sharing this knowledge, that's how we create a safer space for everyone. So let's make a pact to share what we've learned today, to stay vigilant and to always do our due diligence in our crypto dealings. Thanks for joining us in this deep dive into the dark side of crypto. Stay savvy, stay safe, and catch us in the next video where we continue to demystify the world of cryptocurrency.